Hello everyone and welcome back to my channel. I'll be looking at the CSEC Principles of Accounts January 2020 paper 2. This is part 2 video where I'll be covering questions 4 and 5. So for part 1 there's a card somewhere on this video where I discussed question 1 to 3. So you can go ahead and watch that if you haven't done so as yet. Also, give this video a thumbs up by liking it. And if you are stopping by my channel for the very first time, please, a very warm welcome. And please go ahead and hit that subscribe button and turn on your notification bell so that you will be alerted when new videos are being uploaded. Also, there are ads that will be playing on these videos. I know sometimes some of them can be very lengthy, but in order for you to show your appreciation for the effort that goes into preparing these videos for your benefit, it is encouraged. If they're longer than what you are expected, you can just take a little break during that time and come back. And the short ones, they'll go by very quickly. So let's get into this paper. So we'll be looking at question 4 and 5. So let's go down to question 4 and 5. Here we go. So question 4 says, the A part, in the space provided below, draw and label a diagram to show the 6 stages of the accounting cycle for the owner of Ziggy's Shoe Shop. Now, the 6 stages of accounting cycle. What I did, I went ahead and list them. But for you to give it in an acceptable form to CSEC, you simply do it in a circular using your arrow mode from step 1. So the first one is your source documents. Then second, record journal entries. Third, post entries to or transactions to general ledgers. 4, extract or prepare a trial balance. 5, recording or making adjustment and closing entries. And 6, preparing financial statements. So you should do it in a diagram form so that you can get your full marks for the question. All right. And you will go ahead and you will get your marks for that. And it is worth 7 marks for that question, the A part. So let's move on to the next part of the question now. So 4B says, identify the type of business organization described in each situation below. 1, a large-sized enterprise with many employees and owned by a single person. We know that's a sole trader. 1 mark for that. The second part says, shares in this type of business cannot be sold by shareholders on the stock market. We know that. Private limited company. 1 mark for that. The third one says, 3 friends operate a business in which the actions of one of them is binding on the other 2, and we know that's a partnership. 1 mark for that. Let's go on to the next part of the question. The fourth part says, an organization operated by members which provides services to members and is often financed by donations, fundraising, and subscriptions. We know that's non-profit organization, and that's worth 1 mark. And we saw this question coming out on a lot of the multiple choice questions. So 1 mark for that. So that's it for the B part of the question. Let's go now to the B part. Let's go to the other part of the question. The C part says, identify one internal user of accounting information and state how this information is used by that user. So internal users are like accountants, board of directors, and managers. And what you simply do, anyone that you select from this, you simply state how this information is used by that user. And that is very, very, very easy on your part to complete that sentence. So you just take one and highlight the importance of how the information is used by the user. The second part says, identify one external user of accounting information and state how this information is used by that user. So external users are like investors, auditors, creditors, and so on. And what you simply do, you simply take one of them, which is very easy, and explain and state how the information is used by each of them. Any one that you select, just one. I've given you three, which you just need to select one from in providing your answer. And you will get also 2 marks for that. So let's move on to the other part of the question now. The D part says of 4, we're still on question 4. Each of the transactions below violates an accounting concept or principle. State the concept or principle that is being violated. 1. Mr. Peters paid the water bill for his private home and recorded it as a business expense. 1 mark for that. We know that's the separate entity concept. 2. And a receivable is unable to pay due to bankruptcy and the business is likely to lose $8,000. Management refuses to create a provision for doubtful debts or to write off this amount as a bad debt. What's the concept? It's the prudence concept. Number 3, the 3-part thesis. In order to report higher profits for the financial year, management changed its method of calculating depreciation from the straight line to the reducing balance method. We know this is the consistency concept. 1 mark for that. The 4th part of the question says, revenue earned in January 2018 was not recorded until the money was actually received in the following financial period in January 2019. We know that is the accruals concept. So money owing, 1 mark for that. So that's a total of 4 marks for D. Let's go on to the other part now. So the E part of question 4 says, with reference to the violation in D2 above, what is the effect on the income statement? Now let us look back on D2 what it says. It says and a receivable is unable to pay due to bankruptcy and the business is likely to lose $8,000. Management refuses to create a provision for doubtful debts or to write off its amount as a bad debt. So therefore, we know that the net income, it will be overstated by $8,000 on account of that. Let's move on to question 5 now. It says, the accounting department of Jan's Place provided the following information from its various books. So item number we have and our year, beginning of the year January 2019 and the year end December 2019. 1, credit sales $295,380. Two credit purchases, 162,500, and then accounts receivable, 5,460. That's in January 2019. Accounts payable, 4,500. Five cash and checks received from accounts receivable, 290,650. Cash and checks paid to accounts payable, 158,700. And then discount allowed, 1,890. And then we have discount received, $1,940. And sales returns, 2,200. Purchases returns, 3,700. Interest charge on late payments from credit customers, 640. And refunds for overpayments from accounts payable, 1,240. So let's see what we are required to do. Now, the question says, B, using the information provided on page 16, which we just read, prepare each of the following two accounts, control accounts, for the year ended December 2019, total and bring down balances for the year, for the start of the next year. So, as we can see here, we brought down our balances in the sales ledger control account. So what we are doing, we are simply taking the information from what we were given, and then we are putting it into our sales ledger control, the balances that affects the sales ledger control. So our balance brought down based on our information, 5,460, that would be a debit. And then they told us credit sales, 295,380. That's a debit balance. And interest charged on late payments was $640. Now, cash and checks received, that's a credit balance, 290,650. Discounts allowed, 1,890. Sales returns, 2,200. And when we add all of that in total, we got 301,480. So we had a balance carried down on our credit side, 6,740. So that would be our balance brought down to the following year, which would be January 1st, 2020. Let's look at our purchases ledger now. So our purchases ledger control account. So taking our given information from what we were given on page 16, sorry. Here we have cash and checks paid. That's a debit balance of 158,700. Discount receives 1,940. Purchases returns 3,700. And our balance brought down in our purchase ledger control account would be 4,500. And our credit purchases, 162,500. And refunds for overpayments would be 1,240. So given our information and we put them in, we got a total of, our credit total of 168,240. And when we deduct or debit from our credit, we had a balance brought down of 3,900. So we know that our total was 168,240, and our balance brought down to the following year would be 3,900 to January 1st, 2020. And for that, B, 1 and 2, you would get 8 marks for that. So let's go on to our following question now. So here we have it coming up to, this is our final section of the paper. The B says, With reference to the entries made in the control accounts for Jan's Place on page 17, what is the accounting department's source of entry for each of the following items? Item number 1. So we know that would be the sales journal. So let's look on this. So item 1, which is credit sales, we know that would be our sales journal. Then it tells us now item. So what is the accounting department source of the entry number 12? Let's look at 12. Refunds for, here we have it, refunds for overpayments from accounts payable. We know that would be our cash book. And our final section, final part of the question, which is C, says identify 2 examples of accounting software used for preparing and processing payroll. I went ahead and give you one, TT Pay, but you need another one. So in order to heighten your knowledge, you could do a little research and you could do that and you would find out more in the search engine, any one of the search engine bars, and you could find out other examples of accounting software so that you can remember them. So this is it. We have completed the full 5 questions on the January CSEC Principles of Accounts, January 2020 paper 2. Thank you so much for watching.